Very good morning, everyone. Charles here with FRGNT Daily Chart Analysis. 20 past 9 Milano time, Friday the 7th of November 2025. London has just opened. After going through the analysis on all of my pairs, or which I usually trade, AU, GU, EU, and EG. EU is most certainly the cleanest of all. So here is a breakdown on what I see, my analysis, and how I plan on taking that position. So from that weekly time frame, what we can see, if I enlarge that clearer for you on the bottom right hand corner, we can see that price is respecting that weekly 50 MA, doing exactly what we expect it to do. In and around those areas as well, I have highlighted and illustrated those wick imbalances. As I always say, wicks tend to get filled. And if you look through the time frames, you can see that the majority of these wicks created are filled. This wick here created and filled. And to the highs, wicks created, filled, created, filled, created, almost filled, but you get the picture. So that wick imbalance has been highlighted for an area of confluence. As we then look to go down through the time frames, we see if we can superimpose that alongside structure and look to add confluence to a high probable area. What else can we see from that weekly time frame? The price is currently pushing bearish, but again, as I say, by the end of the play on Friday in around 14 hours time, we expect this candle on that weekly time frame to close bullish above that weekly 50 MA, respecting the most recent candles doing exactly the same. As you can see, price trended dramatically on those lower time frames below that weekly 50 MA, but most importantly, that weekly 50 MA provided the rejection that we anticipate to happen based on our theory and our strategy. Now moving over to the mid time frame now, this is the daily time frame. What you'll see is, most unlike my other charts, in and around an area that I'm looking to take a position from, there are no areas of higher time frame order blocks. So I'm specifically focusing on that wick imbalance and the previous daily low. As we go down through the time frames, I'll be looking to see where that previous daily low and wick imbalance that has already been filled aligns with structure. What we do hope to see is some breaks of structure in and around those areas on the lower time frame. Look to isolate those areas, await the lower time break of structure before looking to take our position long. As well on that daily time frame, what we can see in terms of our highest probable position would be coming from the highs around that daily 50 EMA area. Again, no order block as of this moment. The order block that was there has already been mitigated, so we're left with our most higher time frame order block that's still available with the 4 hour. Just below that, as you can see, to the bottom left chart, there is a 4 hour order block that is supported by a 4 hour EMA, and that will be our initial targets when we look to go long on AU this morning or towards the afternoon. So again, bottom left hand corner, what can we see? Well, we've got that previous daily low superimposed on that 4 hour time frame. In the immediacy, as we could see, price was in a bearish downtrend, and what we can take this move here as a break of structure. Currently a lot of change of character, and we will be looking to find that confirmation because of that fact before looking to take the position long towards that 4 hour 50 EMA, where you can see price is currently being respected in an overall downtrend. So in the immediacy, what am I looking for? Well, I would like to see that this candle currently printing within the next 1.5 hours does something different in comparison with the other previous. So just to look within this area, you can see that 4, 8, 12 hours of price action, a 4 hour candle has not closed bullish. So once I get a bullish candle close, even just in and around that area, it doesn't necessarily need to be a bullish engulfing candle like so. As long as I can find something different within that cluster of 4 hour candles, I'd be happy on the lower time frames for price to return back into an area of imbalance that has been left behind. That you can see top left hand corner now on that 1 hour time frame. That will give me the confidence that when the structure has been broken, or at least something is different, if I paint the picture for you, Once we do get a bullish candle closure in that area, I'll have the confirmation then at that point that when price looks to come back down into an area of imbalance, I'll still be waiting for that lower time break of structure just to get that added confidence to the trade, but nevertheless, to provide us with a bullish candle closure suggests that liquidity is sat in and around that area, and it's a position where we'd like to take our trade from. So what you will notice is that although I'm not taking the position from the daily low, previous daily low, this is simply an area of interest that we are looking in and around those areas to find liquidity. Now, towards that top left-hand chart on that 1 hour time frame, there is something very particular I'll draw your attention to. So within this area here, there was a 1 hour order block that was tapped and price respected and gave us our break of structure. If we move that same theory across and continue to highlight 1 hour order blocks, as I hope you can see, there are no 4 hour order blocks in and around this area, we'll do the same again. 1 hour order block drawn on, price respected, and continued its bullish move. So we're doing the same again with the same expectations, simply based on the facts that the market is providing us with. So when we do see this 1 hour order block here, we're expecting price to trend down, top right hand corner now, into that area of imbalance before looking long. Why are we not going to take a position from the 1 hour order block? Well, as you can see, that will suggest that our stop loss needs to be incredibly large. Not so much, to be honest, just 10 pips in order to cover it. However, we can do better if we look to refine that then on that 15-minute time frame, where we'd be looking to get just a 1 to 2, for example. We can almost buy that for, at least by the week, well, the weekly 50 EMA is on our side, but at least by that 4 hour 50 EMA, our risk to reward is increased dramatically by reducing our stop loss position size. Now, why are we not going to cover those previous daily lows? Well, we're going to stick our hat on our bias and look for our lower time frame break of structure to gain our confidence and then take the trade. Again, using previous history, price respects those 1 hour order blocks just here and here, and we're going to expect exactly the same based on facts only. So, as I say, looking for a bullish 4 hour candle close. Again, also on that 1 hour time frame, any bullish 4 hour candle close would give us that 1 hour bullish candle close, also above this little structure area. But what we can also highlight is that potentially it's just going to look something like that. And that illustration is exactly what you would perceive as a standard bullish looking trend. So thank you very much for listening, everyone. My name is Charles, of FRGNT Daily Chart Analysis. Wishing you all a successful day in trading. Thank you very much for your support. All the very best. Do take care.